And I think his providing a 50-year mortgage to people with these assumptions, they don't realize that once you sell your house and you move, you're ending the mortgage. It's no longer a 50-year mortgage.
True.
It was a 10-year mortgage or a 7-year mortgage. And that's the point.
It
And
was,
you wouldn't have been able to get into it with a higher interest payment. So you stretched out your interest payment for an additional 20 years. I
you
think
know,
that's the way you have to look at this.
it's the, we've discussed this many times where 10 years ago, you used to say to somebody, you bought a car, how much was the car? The car was $30,000. And you say to somebody today, how much is the car? The car is $400 a month, right?
Right.
So that's what we're getting down to. We're
Yeah.
getting
Oh, yeah.
people into it. Yeah.
Oh, yeah.
So you, you're once again you're renting your house from the bank. Hey everybody, welcome back to Markets and Madness. As we like to say, the place where we discuss the madness that occurs when economics, politics, and personalities all move in different directions. Tim and I again today. It's Friday evening. We've had a crazy week in the markets between the metals, between the government vote back in action, stocks up and down. A lot of things going on, Tim. Where is your focus today?
Did you happen to notice the gold was off a little over $100 today?
Yeah, yeah, I
Yeah.
did.
Yeah.
And
And gold
yesterday
metals.
it was up something similar. It was up a similar number.
Yeah, we opened up. It was the end of the world. The Dow was down like 600 points, and the
After
Nasdaq was
being
down.
down after being down 700 yesterday.
Yeah, and the Nasdaq was down over
Yeah.
that. We got oversold clearly. I looked at all my oversold technicals, and they were saying it. But there's bigger stuff afoot here. You got to have some elections that are pretty ominous. You could look at Mamdani and what's going on in Seattle and different places, and you could just shake your head and say it's crazy, it's not going to work. But this can't be ignored. You got a significant voting population that seems to be happy denying the law of supply and demand. you know?
Well, that was my point last week that the younger generation is disenfranchised with capitalism. Doesn't work for them, you know?
Yeah, well, if I could really address them to the extent that I think things that need to understand, first of all, I never get that opportunity because somebody who's believing what they seem to be believing is not going to listen to anything I have to say.
Right.
But first off, if you did have their attention, the first thing I would ask and question and ask them to explore themselves is this idea of an entitlement. That's a word that I didn't hear until I was in my 30s. And when somebody is entitled to something, that means a debt is owed to them. And
Right.
that means somebody else owes that debt. And to somebody who would vote for the kind of people we're talking about, they would think that the government owes them that debt. And then you have to ask them, well, what is the government? What is the government if not a collection, a co-op of resources of their citizens?
Right.
So they're really talking about the citizens owing them a debt. So we've got this philosophy that's pervaded now, and it's worked its way through the system, and it's as you say, a group, a generation of people who really believe that whatever system we have, because it's not working for them, is willing to accept that they're owed. And the question is, who pays that bill? So we're developing an economic argument as to how that bill gets paid, and you know, it can't be ignored. It really can't be ignored. You have to face it.
Yeah, it has to be broken. You have to break it before it gets fixed. And we're at the point where we're teetering on the edge of breaking something.
I used to believe that. I don't believe that anymore because the system broke in 2008, and our solution to it was to throw more government resources at it,
Right?
money, and go into debt, and go into greater debt. So if we break the system, that's not going to fix it this time.
Right.
You know,
So it's
when the
got to
debt,
it's got to break. It's got to break. We didn't break it in 2007, 8. No, we patched it with tape and duct tape and glue, and
yeah, that's a fair point.
it didn't break. We lost a couple of big banks. Merrill Lynch got bought up, and Bear Stearns got bought up, and Lehman went away. Um, but it survived. The system survived. I think the people in power were too frightened over what could be. And I think we're getting to the point where I don't know what's going to bail it out. 0% interest rates, I don't know, are going to solve the problem anymore. Printing more
Not
money is not going to
not if
solve
we
the problem.
did. So essentially, I think what you're saying is we default on bonds, right?
Yeah, if that's the case, then we've broken it, and it's
Well,
broken.
if interest on the debt is $1 trillion a year, and that's more than our defense budget,
Right,
where does interest go? $2 trillion a year on the debt?
right,
We can't support the debt,
right.
so we default. That's really what you're talking about here.
That's that's the long-term fear, and maybe it's back in the '80s we said it's coming, and we kept kicking the can down the road, and here we are. And I really felt, and I think on the podcast that we did together, we felt that Doge was the answer, that Trump coming in is going to cut spending, they're going to fix the problem, and that the last votes by Congress that no, we're not going to stop spending. We can't. They don't have the nerve, they don't have the balls to say, that's it, we're going to stop spending here, we're going to put our foot down. They don't have the nerve to do it. So it's just going on business as usual. And Trump is, as you've said many times, is trying to grow a way out of the debt, but it's not solving the problem. We're still spending, 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 spending.
You know, I believe that a free market is the answer, but a free market is a solution. Markets provide solutions, but you have to let them solve.
Mm-hmm.
And we don't appear as a society, as a voting society, to be willing to let them solve. What are the issues on the table here right now? What caused this kind of sell-off that we've had this last 2 weeks, I guess? I would say that it was a question of, let's call it irrational exuberance, what Greenspan used to say. We've taken PE ratios to the point where they can't be justified over long terms. Somebody once said, somebody I listened to said, it's when the A+ student only gets an A. People
Right.
started people started reporting earnings that were just okay, and they were good. And in a normal environment, they'd be fine. Would take the stock up, but took it off. Look at DoorDash and Carvana. DoorDash was off 30% on decent earnings. Um, I that's got to be the weakest spot on the board because I don't see how that company could justify their existence at the numbers that they charge. You order a cup of coffee from DoorDash, it costs you like $20. It's
Yeah, the whole concept doesn't make sense to me, but it's the younger generation that uses them. My kids use them, and my kids have worked for them. They go out and drive for DoorDash. They have both sides of it, so I don't understand. But I think another problem that we've had over the last 2 weeks is people are coming to the realization that the economy is a lot weaker than it's perceived to be. And what bothered me is Trump did two things in the last week, I guess. One is he floated the idea of a 50-year mortgage, just to spur something. He's throwing anything he can at the wall to see if it sticks. And the other was given $2,000 stimulus checks with the tariff money. And I don't know if the tariff money is real. So I look at all of this and saying he's playing games again. There are games there, and I don't know if he's just trying to light a fire somewhere to get some heat in the room. You know?
Well, it's one at a time. The 50-year mortgage. I talked to two people about it, and one guy said, "This makes no sense whatsoever." And I said to him, "Well, do you know anybody with a 30-year mortgage?" He said, "Yeah." I said, "Do you know anybody who has fulfilled or ended up after 30 years with the same mortgage?" 90% of them are sold when people move, you know, the mortgages or they refinance or something. So you can make a 50-year mortgage, a 20-year mortgage at some point in your life by just throwing, ten or $15,000 at it. If, Aunt Mildred dies and you get a payout and you find yourself with a spare 15 grand that you didn't expect to get, you put it down and you take your mortgage from a 50-year mortgage to a 30-year mortgage.
I don't see. I don't think 15 grand does it. I think if you with a 50-year mortgage, first 20 years you don't have any equity. You have the potential of price appreciation, but you don't have any equity in your home.
Yeah, but you're not going to pay interest on year 35 if you move out of the house and sell the mortgage in year 10.
True.
So you only have accrued 10 years of interest, even though you've been paying as if you've got 50 years of interest.
Right. So, but
So,
you haven't accrued any equity. The only thing you have is price appreciation or price
well,
depreciation.
is that true? I don't think it's true because if you haven't paid any equity based on carrying the mortgage for 50 years, but if the mortgage is going to end in year 10, you're not going to owe interest on years 11 through 50. So you recalculate the interest you owe versus the interest you've been paid.
Right, but
You paid
that first 10 years, you're paying 3 grand a month for a mortgage, right? And of that, in a 30-year mortgage, maybe $300 a month goes to equity. The rest goes to taxes and interest. In a 50-year mortgage, that might be like $26 a month goes to equity. So
uh,
and after 10 years with a 30-year mortgage, maybe you have $30,000 of equity that you built up, maybe more. Maybe it's $50,000 of equity. With a 50-year mortgage, I'm saying after 10 years, I don't think you have anywhere
I
near
think
that.
you're incorrect. I don't think you're correct. I think that if you go 10 years and the assumption is you've got a 50-year mortgage, yeah, you're right. You haven't paid any equity, assuming you're going to go the next 40 years with that mortgage. But if you move and sell the house, then the interest you paid is you only have to pay 10 years of interest, not 50.
Yeah, but
You,
but that 10 years of interest that you paid, you're not getting anything back for it. All you're paying is 10 years of interest. You're not getting any equity. That's my point. You don't build any equity.
we got to do this with a spreadsheet. That
Yeah.
I don't think we're communicating. I think if you got an interest, you buy a house for $100,000, $300,000, and your interest over the 50 years is going to amount to $450,000. So you're right. In year 10, you haven't you haven't paid anything near a third of that $450,000, right? So you still got a big interest payment ahead of you.
Hmm.
But the mortgage ends. You sell the house and the
Hmm.
mortgage ends. So you only owe 10 years of interest, not 50 years of interest.
Right. I
Your,
don't
your
disagree with that.
payments your payments have reflected as if you were going to pay 50 years. You got to back up the clock and say, okay, in 10 years, your interest due was not 450,000, it was maybe 175,000. So how much of that have you paid in 10 years? And
I'm
that's the
looking at
number.
on a month by month basis. On a 30-year mortgage, maybe you're paying, $300 a month, and you're building $300 a month one in equity, and month two it's $312, and month three it's $317, and so on.
Yeah, right.
Whereas in a 50-year mortgage, you got $12 of equity, and then you got $14 of equity. Then
Okay.
so
I'm
all you're
embarrassed that
paying
we
is interest.
I'm embarrassed that we're doing this, uh, but if it's year 10, the mortgage stops,
I
right?
understand
The
that. Yeah.
mortgage ends. You've been paying on an amortization schedule that reflects a 50-year mortgage and reflects all that interest due, which is compounded, and it's a huge number. But you're not going to owe that huge number anymore.
I
You've
agree.
got to stop
Right.
the clock at year 10. So
Right.
at year 10, your 50-year mortgage is now a 10-year mortgage. It's no longer a 50-year mortgage. So you paid interest as if it were a 50-year mortgage, which it's not any longer. So now it's year 10. So you got to look at all the payments you made and take a reset the amortization schedule as if you had a 10-year mortgage. And you'll find that you've paid a preponderance of interest, more interest than, right? Or look at it another way. You get two people, one takes a 50-year mortgage, the other takes a 10-year mortgage. They got different payments, but if you let the 10-year person pay the same number as the 50-year person, he's been paying into mortgage interest. He's been paying as if he's got 50 years of interest accruing. He's only got 10 years of interest accruing. So once you stop the clock and sell the house, you look at the interest you owe, and you only owe 10 years of interest, not 50 years of interest. Your schedule reflected a 50-year interest payment. So it's like it's like selling a bond, a 30-year bond in year 10. You got the interest you've accrued reflected a 30-year bond, not a 10-year bond. The
But
mortgage,
but
yeah,
but when you buy a bond, you're earning that interest. When you're buying a house, you're paying that interest, and
you
that's my
still,
point.
but you're paying as if it were a 50-year
To me,
interest
it's you're
payment.
renting the house, and
No doubt. That's
all
true
you
of a 30-year mortgage as well.
yeah, but you're yes, and that's the difference between a 10-year and a 30-year. But you're renting your house from the bank, and all you're getting is either price appreciation or price depreciation.
Right.
That's
But
it.
if you're 22 years old and the difference in interest payments is like $200 a month, right? The hope and the way the system has been working for the last 100 years, you're going to move into, you're going to get raises and you're going to be better off financially over time.
Hmm.
At some point, all I'm saying is when you take an interest payment and the assumption is you're going to owe 50 years worth of interest and you start paying into that schedule, you're saying your first 10 years are interest payments. Yeah, they're interest payments if you're going to owe 50 years worth of interest. But once you stop the mortgage, you have to recalculate and say, oh, I didn't owe interest for 50 years. I only owed interest for 10 years. And you
Right?
look at your payments then, and you got a different amortization schedule. So you do have some equity probably built into it that you wouldn't have had if it's 50 years. Um, that statement, the first 10 years of interest, the first third of your mortgage is all interest payments. That's true. But, but you're changing the maturity of the loan. So your interest payments are different. Anyway,
I, to me, it reeks of something is bigger and something is there's a big problems in the economy. Given a two
well,
thousand dollar
that's a
check,
separate that's a separate conversation. And I think his providing a 50-year mortgage to people with these assumptions, they don't realize that once you sell your house and you move, you're ending the mortgage. It's no longer a 50-year mortgage.
true.
It was a 10-year mortgage or a 7-year mortgage. And that's the point.
It
And
was
you wouldn't have been able to get into it with a higher interest payment. So you stretched out your interest payment for an additional 20 years. I
you
think
know
that's the way you have to look at this.
it's the we've discussed this many times where 10 years ago, you used to say somebody, you bought a car, how much was the car? The car was $30,000. And you say to somebody today, how much is the car? The car is $400 a month, right?
Right.
So that's what we're getting down to. We're
Yeah.
getting
Oh yeah.
people into it. Yeah.
Oh yeah.
So you, you're once again you're renting your house from the bank.
But that's as true, not mathematically true, but it's true fundamentally for a 30-year mortgage as it is a 50-year
Yeah.
and a 10-year
I
mortgage.
I don't
You're renting
disagree.
a house. You're
Yeah.
renting your house from the bank. There's no doubt about that.
And you're entitled to price appreciation or depreciation.
Yeah.
And if we go into and prices have always gone up, and if there's inflation, yeah, that'll work.
Okay. I'll tell
And
you
if
what
there's
I don't
not,
like about it. I think it's fine when people are educated to the extent that they know that they don't have to live with 50 years worth of mortgage and interest
Mhm.
payments. But I think what it does is gives people a bigger leverage position. And that concerns me. The more you make buying a house look like a soybean trader in Chicago, the more dangerous it is because the leverage quotient goes up and you get people that are over leveraged and don't understand the leverage. And I think that's the real problem here. You get a lot of people leveraged here that don't realize the extent that they're leveraged. And something like a 50-year mortgage gives them an opportunity to get even more leveraged.
Yeah.
And it boils down to education. You
But
got
this is similar to what caused the '08 crash. Getting people into houses that should not have been into houses.
fair point. Absolutely true.
So we're doing things to put tape and glue on a problem, not solving the problem. And solving the problem to me is having Congress to stand up and say we got to cut spending. We got to
Yeah.
take our medicine. That's it. And I was reading some stuff earlier this week that in the last election, Trump's last election, he had a big majority of the under 30 vote. And once he had his fight with Musk, and once they sort of disbanded Doge, and I'm not saying they did. I think they still are investigating and looking. But once they stopped that, that's when he sort of lost the young people. Because the young people, they looked at it and said, "This is our hope that we can fix this and turn everything around." So I think we're barking up the wrong tree, and he doesn't have the power of Congress, and they're
No,
stubborn.
here's the problem. We've got a lot of people voting on issues they simply don't understand. The problem has been education for a long time. I've said several times that we live in a giant Jerry Springer show,
Hmm.
and I feel more and more like that. Um, I think, well, uh, I started out by saying I would say a couple of things to that electorate, and one thing I would say is, do you accept that supply and demand can't be ignored? And I'd really ask him to think about the answer to that question because it sounds like a simple question, but it's a fairly deep question. Supply and demand for human existence is like gravity. You wake up in the morning and you come to grips with demand. All your actions are based on satisfying demand. And if you define demand as wants or needs, then everything you do is to satisfy a want or a need. So we're all about demand. They call us carbon based creatures, but we're demand based creatures. So all of our efforts and work that we do is a function of creating supply in order to satisfy our own demand. That's why we go to work. We go to work and we add to the system, creating supply of goods and services in some fashion. And that satisfies not only our demand, but other demand as well. We get paid to satisfy our demand. So to me, that's the human system. Now, if you want to deny the existence of that, that's fine. But you get into the word entitlements again, and the idea is that there is some entity, the government, whose responsibility is to supply us with our needs, our wants and needs. And we don't do that efficiently when we put it in the hands of something else. It just doesn't work. I did a progress report at my meeting Thursday, and I said that Trump's goal, well, his stated goals, and what I perceive to be his goals, is number one, reduce the public sector economy
Hmm.
and increase the private sector economy. Well, how's he done? How's he done on that? And what's the ramifications of that? You get a distorted job picture because the jobs end quickly on the public side, but in the private sector, you get investment, foreign investment or capital, and companies are formed, and they got to go out and find premises, and then they hire, and they hire in a pyramid. You hire a small amount of people at the top, and they go out and hire other people. So that process takes a lot longer. So the jobs disappear quickly, and we've said this all along. The jobs disappear quickly, and in the public sector, and they don't replace that in the private sector right away. That takes time. So we're in that transition, and the job numbers start to look bad. We don't know that because we're not getting any numbers. The government shut down,
And we can't trust what we do get, but
and what we got, we didn't believe anyway, right?
that's right.
So there's that. Has he been successful? Yeah, he's shrunk the public sector quite a bit. Doge hasn't done what they said they were going to do. So that's one of the goals. The other goal he said is, I'm going to set a tax policy, and it's going to encourage investment to grow the private sector. And he's done that, and he's generated a lot of private investment from offshore. So I would say he's been very successful there, and that's in transition too. Those monies come onshore, they get developed and put to work, and it takes time to put them to work. So I give him two A's for both of those things. But we haven't seen the results of it yet. We're not going to see it for probably another 3 or 4 months. Then the other thing, the Fed, he's trying to reduce the cost of the debt by growing the economy and generating more revenue. That's supply side, and reducing the cost of the debt by moving the financing to the short end rather than the long end. And he's doing that with business. Now we haven't seen that happening yet. So I don't, he hasn't controlled the Fed. The first step of that is getting rid of Powell and putting an easy
Yep.
Fed there. And the second step is Bissett, moving the funding from the longer end of the curve to the shorter end of the curve, which is cheaper. So the interest cost will go from $1 trillion to something lower than $1 trillion. And if the economy grows, it becomes a smaller percentage of the tax revenue that we enjoy from the greater GDP. So the jury's out on whether or not he's successful there. He can't be successful while Powell's there, and they can't get rid of Powell. The other thing he's trying to do is the tariffs and generate tariff revenue. And that's twofold. Number one, generate revenue for tariffs, and number two, encourage domestic suppliers and consumption from domestic suppliers, and move the trade numbers again. Now, the trade account, have you seen any numbers on the trade account? I don't know if that's improving or not, but it can't not improve if they're trying to avoid tariffs. So either we're going to get tariff revenue, or domestic producers are going to enjoy a boom, a
And I
boost.
heard today that he's rolling back some of the tariffs on food.
Uh, yeah, well, that's more tweaking, though. I think really
Yeah.
the the real juice is in the manufacturing sector, right? Production.
I
The
have a
other thing
friend who's
the other thing he said he was
that,
going to do was
yeah.
reduce costs, and he's done that by reducing energy prices in a big way. That's been very disinflationary. So I got to give him an A there too.
We have a mutual friend who's in the manufacturing business, and he was telling me his largest customer asked him for a 20, was either a 19 or a 26% decrease in prices for 2026. And I think it was a 19% decrease in prices. And he said, all my uh, raw materials are going up, and you're asking me for a decrease in prices. It's not going to work. He says, I want to raise your prices by 20%. You want me to lower them by 19%. Let's call it even and stay the same for the next year and see if we can work this out. And they said, well, it's all the U.S. manufacturing. Why don't you start manufacturing stuff in Vietnam? So he says, but then I got to pay a 20% tariff. Somebody's got to pay a tariff. He says, I don't know if the Treasury Secretary wants to hear you say that. So I thought it was a very interesting conversation.
Yeah, that is an interesting conversation, and it's going on all over the place.
That's right. This
Yeah,
is one small manufacturer, but I'm sure there's a lot more of those going on.
yeah.
Yeah.
I think Treasury rates came down quite a bit this week, and a lot's telling us that we're going to slow down. The shutting down the government for 40 days is going to impact GDP, and it will impact tax revenues. It will hurt us.
Hmm.
I've been watching a couple of people say that's why the Democrats did it. I don't know if I'm willing to concede that go that far, but there's no question that they've stopped the momentum in GDP and lower tax revenue. So whether or not it was sabotage, they definitely hurt the economy, which sort of boosts the plan to reduce the public sector and grow the private sector. Because the private sector didn't shut down. In fact, it picked up the slack
Right.
to a large extent. We won't know that because we can't see the numbers. We don't know what the numbers look like. But people were still
We don't
working.
know how they're going to release the numbers. Are they going to show us September's numbers next week and then October's numbers the week after that? And then, how is that going to play out? We don't know how it's going to
Markets
come
are going
out.
to do exactly what we did. They're going to ignore the numbers.
Yeah.
There might be a reaction to a released as if it's horrible, and then you'll see a lot of people talking and say, "Well, we can't believe that. We don't know. We didn't get this number. We didn't get that," because it's not one number. When we
Yeah.
see a number, it's an amalgamation of several numbers,
Yeah.
and we don't know if all of them have flowed into the calculation. So this is a weird time, but if you go back to the things we've been saying for the past several months, it's playing out exactly the way we said it would. The public sector jobs are hurting job numbers, hurting the economy, slowing things down. The private sector boost is a little slow in coming, and we're starting to see that slow down from the transition. And I think the markets are adjusting to that. And the markets will have to adjust to it because they've built in these PE ratios that are enormous and
Yeah.
very optimistic.
And I think the fear is also that the sweeping wins that the Democrats had, if that continues in the midterms, then Trump loses his majority. He loses the ability to finish out his plan.
Yeah, that's the danger. And I think the bond market will tell us if that's happening. If this curve steepens and long rates start to get more expensive, that will be a sign.
Yeah. But overall,
Energy
I think.
prices, energy prices have really been helpful, though.
Hmm.
In fact, that's the one sector that's really gaining ground, getting a lot of the flow from technologies. The carriers, the drillers, the pipelines, they're all sensitive to the price of natural gas and oil. So they came down with natural gas and oil, but their revenues are good.
Well, going forward, I'm still negative overall. Um, Last week, I cut out a lot of my longs um, and bought a lot more protection on the downside. I think over the next couple of months, we have a week like we've had this week, where we have some big serious down days, and then people try and buy the dip. Now, this was a Friday buy the dip. I got to see how it reacts over the weekend, and how we come back on Monday, Tuesday. You know.
Yeah. Uh, the, the government shutdown has thrown a monkey wrench into the normal workings. You know, air traffic is down, GDP is hit. GDP was on track to buzz along at 4.5%, and we're losing basically a third of a quarter.
Right.
So if first quarter, what is it, third quarter GDP ends up being 2.5, 2.3, something like that. In reality, it would have been probably closer to 4 if we didn't have the shutdown. It's still a huge, the public sector is still a huge portion of this economy.
Mm-hmm.
So we got a change in the weather versus a change in the climate here. All my positions, I lightened up on technology as you did, which was where the bulk of my positions were. I lightened up on technology. I'm glad I did, and I moved more into energy. And a lot of my puts came into fruition. I had big puts on Carvana and DoorDash, and I took profits on those when they crashed. I'm looking to reestablish them because I think DoorDash business model stinks, and I think the private equity sector still going to suffer a little bit. So Blackstone and Carvana even, and businesses reliant on private equity credit uh, could suffer. So same policy, buying short-term puts, owning long-term calls, owning stock long-term that I want to stay with. Uh, I loaded up on one that hurt me this week, which was CoreWeave. I thought they took enough out of that stock, but
It's
they
down like 40 or 50% from the highs, right? Wasn't it like up
not over
140?
50% for the highs. It was 185. I looked at it this morning,
Okay.
and it's down around 79.
Right.
We reached 74 at one point today.
Yeah.
Um, you know, I got long again in the 80s.
And these
At
are close to new
position.
lows now,
New
right?
lows? No, not new lows. No, not new lows. You mean all-time lows?
No, no, not all-time lows. I'm saying over the last 6 months.
Yes, yes. 70s,
Yeah.
60s, 70s is the place. But the volatility premiums on those options have always been there, and you're always buying at these levels if you're buying off the puts.
Hmm.
But anyway, I think that's one with good earnings that's going to come back. I like that one, and we've been looking for an opportunity to accumulate some of these stocks. I'm looking for a nice sell-off to load up on IBM. I'd like to do that. I'd still want to own that one.
Yeah.
Microsoft is still
As
fine.
as technology goes, that's if you
Yeah,
want to get back into technology. I think
yeah,
some of the high flyers have had their moment, and stick with the tried and true.
yeah. It'll take a little while before those spec premiums return.
Yeah.
um, Greenspan used the words irrational exuberance, and that's kind of what we had, you
Yeah.
know. And any slowdown in the economy emanating from a shutdown certainly leads to that. Anyway, I think we beat it up. We got a little
Yep.
esoteric.
All right. Well, it was good chatting with you. Have a great weekend,
All right.
and we'll
Talk
try it
to you
again
this
next
week.
week.
And given our family situation, I might actually be heading up there next week.
Okay. Yeah.
All right.
See the way it
Talk to you
goes.
soon. Take
Yeah.
care.